Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm speaking to you from New York City on the 14th day of May, 2019. I do want to remind you that I publish a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. You can subscribe to that by going to miningstocks.com, or call our office in New York, 718-457-1426, 718-457-1426 during normal work hours. Would also encourage you to consider subscribing to Chen Lin's letter, What is Chen Buying, What is Chen Selling? Chen is especially astute in the area of biotechs. He's also done extremely well with the energy shares and also follows very accurately and very, very well the mining share sector as well. He and I trade some ideas from time to time in the gold and silver mining sector. I want to thank each of you for listening to the show, making it one of the more popular shows in the Voice America Business Channel. I'd also like to invite you to keep your questions and comments coming along to questionsfortaylor@gmail.com, questionsfortaylor@gmail.com. We do need to thank our sponsors making this show economically viable. Our sponsors for today's show, Great Bear Resources, Klondike Gold, Novo Resources, RN Resources, and Strike Point Gold. Before I get on to today's show, I would like to remind you that if you are in the Vancouver, BC area on May 24th and 25th, there are still a few seats available if you would like to attend the Metals Investor Forum. That's in downtown Vancouver. You can go to jtaylormedia.com, jtaylormedia.com, click on the Metals Investor Forum banner, enter your name and address, and then you'll be assured a seat at the Metals Investor Forum. It is limited. I'm told we're very near to the cutoff. So if you do want to go, you better sign up sooner rather than later. I will be inviting the following companies to the show. They will be there presenting. They are companies that I have recommended in my newsletter. And with the exception of, well, a couple of them I guess I own personally. But GFG Resources, Gold Source Mines, Radisson Mining, Rise Gold Corp, and Strike Point Gold are the companies that I have invited to the show, to the Metals Investor Forum in Vancouver. Well, let's get on to today's show. I've titled it, Making Money with Sprott. Peter Grosskopf, he's the CEO and Managing Director of Sprott, Inc. He visits for the first time. Gwen Preston and Michael Oliver return. Sprott, Inc. is named, of course, after the founder, Eric Sprott. The company has attracted a team of highly talented investment managers and geoscientists to allocate some $8 billion worth of into the resource sector in anticipation of the next precious metals bull market. And you can own shares of Sprott. That's one way to benefit and make profit with Sprott. You can own shares of Sprott. It trades under the symbol SII, I believe it is. I'll verify that with Peter. It's paying about a 4% dividend. The shares are a relatively low price now. It may be a good way to go because, as you'll hear from Peter, it's a very diversified company with lots of different products. You can also invest in various ETFs that they have, both in the bullion ETFs as well as gold shares ETFs that they handle. And the company also is very much involved in managing a couple of resource companies that we'll talk to Peter about when he comes on during the second half of today's show. Right after our first break, Gwen Preston will join me to talk about three of her favorite gold stories, which I believe that she will be inviting to the Metals Investor Forum in Vancouver on May 24th and 25th. But right now, I'm really pleased to tell you, once again, thank goodness, for almost every week, he's with us, Michael Oliver. Thanks for joining me again, Michael.
Hi, Jay. Good to be back.
Always good to have you with us. You sort of help me stay on track and not get too worried or upset, or people get a little bit nervous when markets don't go their way. And we've had quite a few years now. Well, we had some pretty horrible down years in the gold market, and then we've had about 3 years, I would say, sort of base building time frame here. And we're getting a little impatient. Michael, we'd like to see gold take off pretty soon. But before we ask you about gold, I would like to ask you to comment a little bit on this volatile stock market that we've had. Yesterday, with the gold shares, the S&P and the mainstream stocks got whacked really hard. Today, they're coming back. Are we out of the woods now?
Oh, you mean out of the woods if you're a bull?
Yeah, out of the woods
No.
if you're a bull.
No. If you're a bear, you're probably getting into the woods of the good woods. our analysis is momentum-based, meaning we analyze not just price structure, which everybody else does, but price is measured against certain moving averages, and then we oscillate them, thereby creating momentum charts. We look at them like most people would look at a price chart. They see trend lines and so forth. Well, our work told us in the low 2900s, in other words, about 1% or 2% off the recent high, that it was going to break down again. Now, we didn't mean break down off the page, but break down enough to be meaningful. We hit a number on Friday that we'd pre-specified as a bounce point. That was 2865 on the S&P, and it was momentum-based, not price. And sure enough, they rallied 63 points off that in about 4 hours on Friday. And then yesterday gave it up and broke through that level, closed below it. Now we're back above it a bit, and the point was to break it, and we broke it. So that's sort of a negative. It's like a shin kick. You know, you've got a fractured shin. Okay. The other level is now price-based that I can see that they're defending, and that's 2,800 on the S&P, cash, that is. Futures already traded it in the night session. You touch 2,800 on the S&P, and something happens to the guys who keep big, large, long-term point-and-figure charts of the S&P. If you go back to January 2018, the top tick was 2,850 on a 50-point scale. You know, X's, O's, you've seen those kind of charts.
Yes.
We collapsed to 2,600 after that. Okay, then you came all the way back up to 2,850, and you put in a 2,900 uptick. That was in September of last year. What did you do after you break out above the high? You collapsed to 2,350. Okay. Now you come all the way back up. You've taken out the 2,900 high by reaching 2,950 this month. And what are you threatening to do? Throw 3 down ticks to 2,800. If they touch 2,800, and if I were just a price guy, I would get a little itchy. And so yesterday they bought it at 2,801 and change. Okay. So they know where they don't want to touch. I would suggest anybody who's intensely long on the stock market, if you touch 2,800, pack it in. You know, this is getting ridiculous. I think what we've got is 3 widening highs on the S&P going back to January of 2018, where you make a higher high, fail, higher high, fail, you know, and you've got lower lows in between. So it's a widening pattern. It's a classic price chart pattern. Momentum says it's likely to be a widening top on price because momentum is nowhere near reaching the January high of 2018, nor the September high of 2018. So momentum's headed down, price is inching new highs. There's a contradiction there. And we argue that pay attention to momentum, and also now on price, pay attention to 2,800. If you see 2,800, I suspect no matter what the headlines are going to be, plus or minus on this trade stuff, we're headed down. Now, the speed is the only issue at that point. Meanwhile, gold, after having been whacked to its August low of last year, about coincident, by the way, with the high in the S&P last year, it's September of 2018, has turned up, and we recommended, based on momentum factors, that our subscribers get long on layers. The midpoint of the entire long process was about 1240. We urged them to, best they can, ignore the pullback that we've had for the last 3 or 4 months. So far, that pullback has been noticeably anemic. If you're a short, even from the high in February, 1340 area, right now you're gaining about 3%. Okay, it's now 4 months later. You're up 3% if you shorted the top tick. Okay, put that in perspective. When you go back and compare to the 2016 high, that big rally high we had then, or the 2018 high, you count out the number of months we are since our February high, and you were well below the high within that span of time. We're not. So even the price action of gold is tonally different than it was at those 2 prior peaks, which also reached into the mid-1300s. So what we have on a price chart for gold is a bunch of guys selling the mid-1300s thinking they can sell it there forever. And we argued this last time they shouldn't have gotten back up into the mid-1300s unless it was a hint that they were going through, and I think that's what they're going to do. So the recent action in gold, by the way, last week and then this week especially, indicates to us that you've highly likely seen the low of the pullback. That was in the 1260s. And the next trip is to go up and challenge the highs. Meanwhile, the gold miners, typical, and silver as well, they're typically lagged to gold. And when gold is down, they're down more. When gold turns up convincingly, they flip up and become stronger than gold. We expect that again this time. as gold is advancing from these current levels back up toward the 1320, 1340 level, that you'll see the gold miners, juniors and majors, and you'll see silver suddenly get a backbone and start to outperform gold again.
Mm-hmm. Well, I should tell our listeners, with respect to your service that you provide for gold and silver, for precious metals, that you provide a lot of information there. And one of the things I really appreciate, Michael, is when you do individual charts on some of the miners. Most of them are bigger companies than I follow in my newsletter, but there's 3 of them that I have in my letter, Kirkland Lake, Sandstorm, and Newcrest. You pointed out look extremely bullish based on the charts on your momentum work. And how does the GDX look to you right now?
Well, GDX on our intermediate trend, we look at long-term, intermediate, and short-term, okay? Short-term and intermediate term were the things that turned down for gold, silver, and GDX in the recent downturn of several months ago, okay? GDX, in our view, is now turned back up as of yesterday's close, in fact, was sufficient to cross a structure that goes back several months on our intermediate term momentum charts. It's not evident on a price chart. Mm-hmm. Again, momentum presents a different picture, and we go with momentum because momentum usually leads price, not the other way around. Yeah. So I like what GDX has done. We're waiting on silver. We'd like to see about 10 cents above today's high. That would turn it on, and I think we'll get it. Obviously, if gold continues to click up, the silver will get into gear again with it. I think what was going on yesterday, when if you looked at your quote screens, anywhere you could be in China, you could be in Japan, Europe, or here, and you flip on your quote screen, and every stock index in the world was down heavily. Most industrial commodities were down heavily. Basically, the only green light on your screen was gold and gold miners.
Right.
Silver, meanwhile, was slightly down. So it didn't quite know whether, am I an industrial metal or am I part of the gold package? And we argue, no, you're part of the gold package. Don't worry about it. Now, today gold's down modestly and silver's up a little bit. But we expect the real surprise to come if you get further gains in gold, which we expect, that silver's going to get a backbone and the miners will bolt upward as well.
All right. We'll have to leave it go at that. Thanks again, Michael, for your insights into these metals markets, which, of course, are so important to us and to our listeners.